Imagine spending an entire year working your fields, planting in spring, tending crops through summer, watching them grow perfectly. Then when harvest comes, instead of selling them, you destroy everything. You plow healthy wheat back into the soil. You bale crops into cattle feed that were meant for human consumption. You walk away from fields full of ready-to-harvest grain. This isn't fiction. This is happening right now across Kansas. And the reason why should terrify every American. The wheat belt collapses. Farmers across the U.S. wheat belt, stretching from Texas to Montana, are cutting their losses early. They're choosing to bale wheat into hay, plow their fields under, or turn them over to animals to graze rather than harvest. In Nebraska, wheat acreage is less than half of what it was in 2005. The Great Plains, long celebrated for amber waves of grain, are watching those waves disappear. With wheat prices hovering around $5 per bushel, U.S. wheat farmers have reached an inflection point. Many are forced to either lose money on harvest, feed wheat to cattle, or kill off the crop entirely. Dennis Schoenhaus, a 68-year-old farmer who raises crops and cattle near Kremlin, Oklahoma, and serves as president of the state's Wheat Growers Association, stated the brutal truth. They can't sustain that. Eventually, you either change to other crops if you're able to, or you go out of business. The math is simple and devastating. It costs more to harvest, transport, and sell wheat than farmers receive at current market prices. When you factor in diesel fuel for combines, labor costs, equipment maintenance, and transportation to grain elevators, many Kansas farmers are losing $20 to $50 per acre just by harvesting. The only way to minimize losses is to not harvest at all. The Kansas disaster. Kansas sits at the epicenter of this crisis. The state produces roughly 319 million bushels of wheat and 190 million bushels of grain sorghum annually. But in 2025, a catastrophic event made everything worse. The Trump administration gutted USAID, eliminating the Food for Peace program that had been purchasing billions of dollars in commodities from American farmers since 1954. Food for Peace spent around $2 billion annually buying wheat and grain sorghum from farmers, ensuring stable markets while fulfilling global humanitarian needs. Kansas farmers were among the biggest beneficiaries. When the program was dismantled, that guaranteed buyer vanished overnight. Without this demand, oversupply led to a price collapse. Conservative estimates suggest a 30% drop in wheat and sorghum prices due to the loss of this large-scale buyer. The financial impact is projected at $1.01 billion in lost revenue for Kansas farmers in 2025 alone. If the program remains defunct for the next decade, the economic toll on Kansas could surpass $10 billion. The USDA is expected to eventually oversee food aid distribution, but rebuilding the program will require new legislation, restructuring, and funding allocation. Optimistic estimates say it could take 2 to 5 years. Kansas farmers will continue bearing the brunt during that entire period. The trade war devastation. While farmers were already struggling, President Trump's tariffs created a perfect storm. In 2024, U.S. farmers sold more than $12 billion worth of soybeans to China. In May 2025, China stopped buying U.S. soybeans in retaliation for tariffs. Total 2025 soybean sales to China reached zero, the first time in nearly a decade that America sold zero soybeans to its largest customer. Kansas farmer Vance Emke from Lane County described the impact bluntly. Those tariffs have done two things. They have caused the price of everything that we grow to go down and the price of everything that we buy to go up. U.S. farmers grow way more corn, soybeans, and wheat than Americans eat. They need exports and open markets. When those markets vanish, there's nowhere for the crops to go. Grain sorghum exports tell the same story. Kansas farmers produce about half of all U.S. milo exports, adding roughly $1 billion to the Kansas economy. A recent USDA report reveals that no exports were reported for the period ending August 31st, 2025. Accumulated exports were down 70% from the prior year. Andy Hinneman, a Kansas farmer, explained the challenge. In the past, a lot of our Milo exports have gone to China, and not having them as a trade partner right now is definitely a challenge. The harvest that never happens. The 2025 winter wheat harvest in Kansas fell drastically behind schedule. By June 15th, only 3% had been harvested, compared with 11% as the 5-year average. Oklahoma was 30% versus 46% average. Texas managed 56% compared to 57% average. Excessive rain kept farmers from collecting wheat that was ready for combining and contributed to lower wheat condition ratings across the region. But here's the disturbing reality. Some of that delayed harvest never happened at all. For farmers with crop insurance, damaged or unprofitable wheat fields can still earn revenue through insurance payouts. Many farmers ran the numbers and realized they would lose less money by plowing under their wheat and claiming insurance than by harvesting and selling at current prices. This is not a good business model. No farmer wants to chase insurance payouts instead of selling crops. But when the alternative is losing tens of thousands of dollars on harvest costs, the choice becomes clear. Destroy the crop, take the insurance payment, try again next year. Glenn Brunko captured the desperation. The crops, we all know were not good. Prices were not good. Anybody relying on crop production, it's been tough. I'm hoping we've hit rock bottom and we're on the way up. We don't know. The ripple effects. When Kansas farmers stop harvesting crops, the damage spreads far beyond individual farms. Local grain elevators lose business. Trucking companies have nothing to haul. Equipment dealers can't sell parts or provide service. Small-town businesses that depend on farm spending watch revenues collapse. Rural banks see agricultural loan portfolios deteriorate as farmers can't make payments on operating loans. Nick Lewandowski, executive director of Kansas Farmers Union, explained the nationwide impact. The potential loss of $2 billion from the collapse of Food for Peace creates devastating ripple effects through the crop market for Kansans and farmers across America. That's not just lost revenue for farmers, that's lost jobs in processing plants, lost trucking contracts, lost sales for input suppliers, and lost tax revenue for rural communities. The Kansas City Federal Reserve reports that agricultural credit conditions have deteriorated for 6 consecutive quarters. 30% of agricultural lenders are seeing farmers who cannot pay their bills. Loan repayment rates are at their lowest since early 2020. Some farmers will get operating loans for spring 2026 planting. Many won't. Those who don't get loans will either sell out entirely or sit out a season and hope conditions improve. The labor and logistics crisis. Even when farmers want to harvest, they're facing impossible challenges. Immigration enforcement has driven away agricultural workers, leaving crops unpicked in fields across America. One Florida homestead farmer, who requested anonymity for fear of deportation, explained, "A lot of people are really afraid, and sometimes they come, sometimes they don't, and the harvest is lost because it cannot be harvested." For Kansas wheat farmers, the situation is somewhat different because wheat harvest is highly mechanized, but labor still matters for maintenance, transport, and processing. More critically, the entire supply chain is optimized for specific markets. When those markets disappear, crops literally have nowhere to go. Storage facilities are full. Export channels are closed. Domestic demand can't absorb the surplus. Farmers face a brutal calculation. The cost of harvesting includes combine operation, fuel, labor, equipment maintenance, and transportation to elevators. If grain prices are below the cost of harvest, farmers lose money on every bushel they bring in. The only rational economic decision is to leave it in the field or destroy it before harvest. That's not waste from a farmer's perspective, that's damage control. The painful irony. Here's what makes this crisis particularly devastating. These crops are perfect. The wheat is healthy. The grain sorghum is ready. The yields in many areas are good to excellent. Kansas farmers did everything right. They planted at the right time, they managed their fields properly, they got adequate rainfall in many areas. The crops grew exactly as they should. And now they're destroying them. Not because of drought, not because of disease, not because of pests, but because the economic system that's supposed to support American agriculture has completely broken down. When a guaranteed buyer spending $2 billion annually vanishes, when America's largest export customer stops buying, when input costs remain elevated while crop prices collapse, farming stops making sense. For farmers who consider donating crops to food banks, the logistics make it impossible. Food banks have limited storage space and fewer volunteers. The costs of harvesting, processing, and transporting crops to food banks puts additional expenses on farms that have already lost their paying customers. Many farmers have been forced to leave food in their fields because without a market for it, they can't pay for labor to harvest or transport. The government response. The Trump administration announced a $12 billion farm bailout in December 2025 to compensate for widespread losses. But agricultural leaders say it's nowhere near enough. Dan Wright from the American Farm Bureau put it bluntly, a program that provides roughly $50 per acre will not save the thousands of family farms that will go bankrupt before the end of the year. Agriculture Secretary Brooke Rollins called 2025 the worst conditions farmers have faced in almost a century. She confirmed that direct payments to farmers for emergency relief are in the works for presentation to Congress. We didn't get here in a day, and we're obviously not going to fix it in a day or a month or a couple of months, Rollins said, but immediate assistance is needed. The problem is timing. Assistance from the One Big Beautiful Bill Act isn't scheduled to arrive until fall 2026. That's far too late for farmers making decisions right now about spring 2026 planting. Many have already decided to sit out next year entirely. Some are selling their operations. Others are transitioning to different crops or livestock. The Kansas farming landscape is being permanently transformed. The devastating conclusion. No farmer wants to destroy their own crops. Nothing pains a farmer more than plowing under healthy wheat or leaving perfect grain sorghum unharvested in the field. The idea of wasting food, especially when there's so much unmet demand for it around the world, is painful to everyone involved. But farmers aren't destroying crops because they want to. They're doing it because it's the only economically rational choice left. When harvest costs exceed revenue, when guaranteed markets vanish, when export customers disappear, when trade wars eliminate your biggest buyers, farmers have two options: lose more money by harvesting or lose less money by destroying. It's a choice no farmer should ever have to make, but it's the choice thousands of Kansas farmers are making right now. Glenn Brunkow hopes we've hit rock bottom and we're on the way up, but the data suggests otherwise. With food for peace gone, with China not buying, with crop prices at multi-year lows, with input costs remaining stubbornly high, and with assistance not arriving until fall 2026, the bottom could still be far below where Kansas farmers are today. The wheat belt that fed America and the world for generations is watching its crops go to waste, not because of natural disaster, but because of policy failures, trade wars, and an economic system that has abandoned the farmers who grow our food. And every acre of healthy wheat plowed under is a reminder of just how badly that system has failed.